What's going on, guys? Today I'm going to be bringing you an exciting video on the simple Forex strategy. I'm cutting out all the nonsense. Let's just jump straight into the video. The simple Forex strategy is easy as ever. It's only got a simple few steps to follow. That's why it's called the simple Forex strategy. Today I'm going to bring you some trade reviews of just a couple trades I've taken over the past couple weeks. I want to show you and break down exactly how the strategy works. I want to deliver to you guys these simple rules to follow when trying out the strategy. Go ahead and try it out for yourself. See if you like it. I know a lot of people who follow the channel love the simple Forex strategy, and today we just want to bring it back, put it out in the light again, and just give you all a refresher on how simple and effective this strategy really is. So we're going to break down a few trades we did. We're going to go over and show you exactly how to do this yourself. So the simple Forex strategy works on three simple concepts I'm going to break down here today. The first concept is you want to trade with the direction of the trend of the higher time frame. So for example, I took this trade based off the 1 hour time frame. Now a simple key to remember is whatever time frame you're on, if you want to look at a higher time frame or even a lower time frame, a nice key point to remember is just remember the number 4. If you use 4, you can multiply whatever time frame you're on, multiply it by 4, and that's the time frame that will be considered the higher time frame. You don't want to do, double of what it is. You want to do 4 times what it is. Just trust me on that. That's the most effective way to go about it. Same thing goes for if you want to jump to a lower time frame. Let's say you're on the hour, you want to be on the lower time frame, divide it by 4. That'll give you the 15-minute time frame. So jump to the 4 hour time frame. And as you can see, if you look at the 4 hour time frame, just from a glance at the time frame, you can see we're clearly in a downtrend. And the importance of knowing your higher time frame and trend is, look, check this out. All the bearish movements are going to be way bigger than the bullish movements. As you can see here, from this one movement, we have 210 pips. On the other side, we only have 55. Same thing here. We go up again. We have 140 pips. And then back up only 100 pips. Same thing goes here, back down to the very bottom, we have 123 pips. I think this is about the only time we see the bullish momentum actually be more powerful than the bearish. As you can see here, it's 140 versus the 123. And then same thing here, we have a 178, and then here we only have a 103. So this is a rule of averages. On average, it's going to be more effective to trade with the trend direction. It's going to make sure we can get a higher risk to reward ratio and that the trend is more probable to head in our favored direction. That's all it's about. If we drop back down to the 1 hour time frame, we want to wait for price to move up, and we want to catch the reverse of it going back down to our original higher time frame trend direction. As you can see here, we were in a minor uptrend just right here. And then what we're going to do is wait for the trend, or we're going to wait for price to break the higher low. When we're in an uptrend like this, the uptrend makes lows along the way, and the most recent higher low, which was right here, we want to wait for price to break that. And as you can see, price ended up breaking right through that. We had a candle close below the blue line and then a confirmation candle here. And then all we do is wait for a pullback. Now the entry doesn't really matter too much. You could enter directly on the line if you want. You can enter back. The only important key part of your entry is that it's going to determine what your risk to reward ratio is. Obviously, a better entry is going to give you a better risk to reward ratio. On the flip side of that, there's also a chance that if you're heading, or if you're estimating that price is going to come back up, and let's say you miss it and the trend just keeps going down, you're going to miss out on some trades. So it's kind of like a double-edged blade scenario here, where no matter what you do, you're going to have negatives on both sides. So this just really depends on your style. If you've got a good psyche and you're okay with missing trades, then go ahead and try to get those better risk to reward ratios. But if you like to be in the action all the time, just go for those nice simple 1-to-1s and just go ahead and enter on the break line. 99% of the time you're going to get an entry on the break line. Only few times will it actually pull back to exactly where you are, guessing it's going to pull back. Now, if you're one of the pullback people who like to enter on the pullbacks, some key areas to look for. are areas where there's lots of wicks. As you can see here, there's lots of wicks. So you could even start your entry zone where all the wicks are kind of forming, as you can see here. So as you can see here, we have a large wick being produced on this green candle here. And then we have many more here, but they all generally start in this area. As you can see, this is where price kind of came up and touched into. So that's generally where I like to enter. It's also kind of a feel thing. You'll kind of get an idea, get a feel for what the pullbacks are going to look like. If you like to use a Fibonacci, as you can see here, it pulled back to that golden zone that people like to refer to. So it all depends on whatever you figure out, but that's not the important part of the strategy. I'm sorry to distract you from learning the simple Forex strategy, but today I'm excited to bring to you a broker that I've been with for the past couple of years, and I think you should be as well. That is Hanko Trade. If you're looking for a great, reliable broker to use, go ahead and sign up with Hanko Trade. They've got low commissions, they've got low spreads, they're fast, efficient, and reliable. And if you're looking to start demo trading or live trading or whatever it may be, even copy trading, Hanko Trade has it and offers it. So if you're looking to sign up with Hanko Trade, go ahead and click my link description below. Have yourselves a good time. Let's get back into the video. Now for exit, originally I was going to try to exit at the low here. This would actually be a nice responsible spot to look for an exit, just because as you can see here, this was a very common area that price came down to and touched. Instead, I did end up targeting a little bit lower around here because I knew it could definitely have a chance to go look to the all-time low here. I knew price was going to try to at least test that. I didn't know if it was going to go exactly all the way down. So the next reasonable spot was right here, because as you can see, some lows kind of got near it. And then as you can see here, we built a little bit of price action on this area. So this was a nice, easy exit for me on that. But yeah, that's trade one, and we're going to dive into the next trade. Hopefully you guys are following along and enjoying the content. We're going to get on to the next trade, and I think you guys are going to be excited for this one. So I know you scalpers are going to be excited about this one. This is a nice trade on US 30. This goes out to my US 30 people as well. Nice little trade I caught on US 30 earlier today. This one was exciting because luckily I had a good stop loss on this one. Not gonna lie, it was really close and it kind of scared me, and I even almost cashed out because I thought I was gonna hit my stop loss. This is why you follow your gut sometimes. Sometimes you don't follow your gut when you lose. You only follow your gut when you win. Anyways, so yes, the breakdown here. We're gonna go over the simple steps. Here we go, nice and easy. We were looking for a 1 minute scalp, so that meant the 4 minute, referring back to earlier, if you remember, the 4 minute, you multiply your time frame by 4. So the 4 minute was our higher time frame in this case. You can also do a 4 times again to get an even bigger insight. Sometimes, depends on the case. When you're scalping, sometimes you want to do that just because the 4 minute isn't like that much of a bigger time frame. So then sometimes you want to go to the 15 minute in this case. In this case, the 15 minute would have been in an uptrend kind of at the time when I did take this trade. But here I was really banking on the 4 minute giving me my time frame. Because at the time of taking this trade, we would have only seen about this much, and this right here. This is right here what indicated that we are in a downtrend. Now, obviously it looks, way more like it's been in a downtrend because we've seen this. But before this, even if I use replay mode here, as you can see, it was just partially turning into a downtrend here. And I knew it was turning into a downtrend because obviously we had this major uptrend here. It was crossing over the trend line, and as you can see here, breaking below the higher lows and just continuing downward. So that was enough indication for me to believe that we were at least going into a temporary downtrend. So because we're in a downtrend, what does that indicate to me? Well, that indicates to me that we need to be looking for sells on the 1 minute, not the 4 minute. And for this one, pretty simple. We were looking for a temporary uptrend. So price made this huge move off of that 930 rush of volume. So right here, it just kind of went up. I was watching it for a while and I saw it go down, 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 down. Started to form this uptrend. So I thought this would be a perfect time to see if we can get a little more momentum to that downside, since we are still technically in a downtrend on the 4 minute. I knew at least the bare minimum we could get a nice 1-to-1 out of this. So I want to quiz you guys for a second. Where do you think I messed up in this? Because I ended up making a mistake, pulling the trigger on this trade without even thinking. Sometimes you can overlook certain things, but I'm gonna show you why it still worked out. But if you haven't noticed by now, I'm gonna go ahead and show you. Pause it if you want. One more time to think. This wasn't even a true lower high. As you can see here, it made a low on the chart, but here on the MACD, you can see it's still just one big high. It didn't actually make its first true high until here. Sorry, its first true low until here. And then it formed another low here, another low here, and then finally formed this last low here until, and this is the important part, until it had a true break here and pulled back up into, as you can see, all these wicks that were formed here, pulled back into my original entry and still made profit at the end of the day. So sometimes your mistakes do work out, but this is an example where I should have never taken the trade in the first place. Sometimes you gotta pay attention to these minor little details that can end up being major details when looking back in the trade afterwards. So most of you, I assume most of you, are watching this video to learn. So this last example is going to show you a lot, and you're gonna learn a lot with one of my mistakes. Not really a mistake, just a miss out here. So there's a couple of things that you can learn from this trade. We're gonna break that down in a second. So what happened here was I saw the perfect setup. Just to show you, on the 1 hour, we had a nice long downtrend of Euro JPY. So of course, according to my simple Forex strategy, what am I gonna look for? I'm gonna look for trades on the 15-minute. So I was looking for a nice downtrend to start. We had a nice temporary uptrend here. The higher low was right here, and it got broken very nicely. I was waiting for a pullback, but unfortunately I like to take trades on the pullback and I missed out. That's normal. That's what happens. That's just a part of trading. A key learning experience that I want to teach you guys here, something that I should have mentioned in some other videos, but I just assume most of you would think to do so, but I think this is an important time to bring this up. A lot of you might have the question, do we still enter the trade? Do we still enter the trade after this pullback? Right? Because it broke through and it's coming back up. So would it still be valid to enter the trade back here? You know, like let's say this played forward. Would we have entered right there and lost? No. And I'm not just saying that just because it was a loss. I'm saying that because when you have price move this far off, when it finally comes back, there's no going back down. There's none of that. It is definitely going to reverse. This trade has already basically played out. And if you're waiting to enter, you're just hoping for a lost dream. So a key way to remember this is wherever your temporary uptrend or downtrend starts, once price basically breaks that barrier, as you can see the low is there, once it's already moved this far down, even getting close to it, you should be asking yourself, it should have made a pullback a long time ago. Is it still worth entering this trade? Most of the time it's not, so we did not enter this trade. So that is one good key thing to learn. Another key takeaway from this trade is even if you want to enter on the break line, you can't be saved. Sometimes price can still move forward, because as you can see, by the time it actually broke, you know, the trend line here and then came down and closed at this candle, it wasn't coming back to the break line. It did not come back to the break line. So you would have even missed out on this trade, even if you're a nice one-to-one trader. That's why I think sometimes you just got to go for the better risk to reward ratios and wait for price to hit your entry. So you can get those nice 1-to-4 risk to reward ratios. That's what it's about. Anyways, this was a quick video. Hopefully you guys enjoyed that one. Like I said again, go ahead and sign up with Hanko Trade. They're an excellent broker. They've treated me right over these years. They've made sure that they've been reliable and outstanding. Go ahead and sign up with them. Start demo trading, start practicing this strategy, any other strategies, just start. Anyways, hopefully you guys enjoyed this video and have a good one.